One thing I've been watching is the Biden administration has come out with more stimulus checks in an effort to help people better manage their energy bills going into the winter. And for those who understand economics, you realize that this is just going to exacerbate the problem, because the way that you fix inflation is you decrease demand and increase supply, and they're doing the opposite. You know, they're giving out these stimulus checks, they're increasing aggregate demand, and then they're reducing supply through the sanctions against Russia, and with all this narrative towards a windfall profit tax, and it's creating huge issues that we see pop up in the diesel market. You know, the inventories there are close to an all-time low. You know, 25 days of inventory is all we have left. I think what they're going to do is they're just going to try to buy votes any way they can. And if that's through just giving out monies that's going to make these problems that we have in the economy worse, that's exactly what they're prepared to do. But they don't understand economics, and they don't realize that by helping them with their energy bill, you're just hurting them with their food bill. There's no free money here. So if you're going to reduce the cost by giving people money for X, you're going to increase the cost of Y. So on net balance, over the long run, it's just going to put them in a worse position. You think we would have learned this back in 2020 when we shut down the economy, we did all these lockdowns, these governments, these central planners, these authoritarians, and then they gave out these stimulus checks, and it caused what? Inflation. So the poor and middle class are worse off today than they were in 2019. There's going to be a political push to prevent Jerome Powell from continuing to raise rates. Now, I'm not talking about today or, in the next quarter, but going into 2023, they're going to try to prevent him or pressure him, let's say, to stop raising rates. This is assuming that we still have this inflation problem and we haven't had a deflationary bust between now and then with the stocks and the housing market, et cetera. But then I think what they're going to argue is, okay, stop raising rates, but the way we're going to tackle inflation is by giving stimmy checks, like we're seeing now, to help people afford the higher prices, and we're going to institute price controls, just like we had in the 1940s and just like we had in the 1970s. So we're going to stick it to those greedy capitalists who are increasing prices to crush the poor and middle class by capping the amount of price increases that they can actually implement. We're going to take their profits away from them. So I think this is kind of the battle cry that you're going to hear going into 2023. Again, to be clear, let's stop Jerome Powell from raising rates or these central bankers globally. Let's go ahead and institute price controls and then give people free money to afford the price increases that we've had up to this point. I think the Fed is going to do whatever the administration wants them to do. And if that's stop raising rates and implement, so they can implement price controls and do more deficit spending, I think that's pretty much the highest probable outcome. We already know how to manage an economy. The best way to do that is through prices. They always talk about increasing liquidity. Listen, we don't have a problem with liquidity as long as we allow a clearing price. So let the free market. Which I'd like to remind everyone that the prices from 1800 to 1900, 100 years, went down by 50%. And this is with fractional reserve banking, but you just had the government out of it. We actually were able to determine what the prices of goods and services, including money, was supposed to be set by the marketplace. So all of these problems that the Fed is trying to fix, whether it's inflation, whether it's QT, QE, the Treasury's coming out now, Janet Yellen, and saying that they're going to do a bond buyback program or a debt buyback program. It's basically an Operation Twist. And they're saying, we've got this problem with liquidity at the long end or with the off-the-run Treasuries, and we need to replace them with more on-the-run or bills. Again, just let the prices set themselves, and it's going to handle all of these issues. It's a very easy problem to fix. Just go back to free market capitalism. The people that create the green pieces of paper, or people who control the energy and commodities. You see, for several decades, the financial economy, when the West has had all the power. But now I think what you're seeing is that these BRIC countries are starting to kind of scratch their head and say, why should we play by your rules just because you print green pieces of paper? That doesn't make any, or because you have the euro and that's a good currency. No, listen, we have all the stuff you need. We have the oil, we have the nat gas, we have the fertilizer. So why should we play by your rules? If we have the stuff that the whole world needs, we need to flip the table here. We need to flip the script. I think that's exactly what they're trying to do. We go back to that diesel shortage. You say, what can the United States do? So hopefully we can solve these problems, and we don't have to solve the problems by having a GFC 2.0, which would just reduce demand to a point where the demand supply was in equilibrium. And because these issues are definitely structural, and they go back to the sanctions, they go back to the lockdowns as well, where we put all the refiners out of business. So now we're having to pay the piper here, right? But let's just assume that you go to a world that's not too far off, where the United States has no diesel. How do you get your food, right? How do you heat your house if you're in the Northeast? I mean, you sit there and people say, oh, that's kind of a conspiracy theory, you're fear-mongering. No, you're not. You got 25 days left. And that could possibly go down to zero. And if it goes down to zero, now all of a sudden, you're literally living in a hellscape. It's like a zombie apocalypse. And we're right on the brink of that because we're having to find out the hard way that green pieces of paper don't matter as much as energy, commodities, food. I just bought some for my own portfolio yesterday, 6-month T-bills. We go back to the yield curve right now. And when the yield curve inverts with the 2 and 10, so 2-year and 10-year, this is a very powerful indicator, but it doesn't give you a lot of timing, right? It's pretty much 18 to 24 months. You're most likely going to have a recession, 95% probability, call it, going back to the 1950s. But when the 3-month inverts with the 10-year, that's more of a timing tool. And usually that means that you're right in a recession or you're headed there very, very quickly. And if we go into a recession, I think there is a high probability that the Fed pivots, especially if there's a disorderly decline in asset prices. Not a soft landing, but a hard landing. And you can get a 6-month T-bill right now for about 4.5%. And what I'm doing personally is I'm keeping my dry powder in that type of T-bill because long term I want to buy commodities. I think that we are in a super cycle that will last for probably 10, 15 years. But they're expensive. They've run a long way. So it's not like I'm a buyer at this price. I'm waiting for them to come down. I've got a watch list set up. Well, I always buy gold because it's insurance, so I buy it at any price. But I think a better question is the gold miners. And yes, now I think it could be a good time to buy gold miners and Bitcoin as well. Because again, I think that 3-month inversion with the 10-year is telling you that we're closer to a Fed pivot, a lot closer to a Fed pivot. In which case, again, I like the dry powder in T-bills because you get a pop if the Fed lowers rates, and then you can take that cash, buy commodities, or for those who like Bitcoin and gold miners, now might be a good time to consider buying. The rich getting even richer and richer and richer, and they're able to afford all the brand new Ferraris while the middle class gets completely decimated. So this is not a good sign for the economy. I mean, I would look at the shipping companies saying that, hey, we're going to have some tough times coming up. Or I would look at the Amazon giving horrible guidance. Or the Netflix. This is telling you what's happening to the poor middle class. And at the end of the day, that's what matters when we're trying to figure out what's going to happen to economic growth. The bottom line is there's an extremely high probability that we will go into a very significant recession going into 2023. Call it the next 3 months, 6 months, 9 months. In which case, the Fed will most likely pivot. And that's going to be great for investors because if you're really paying attention, that should provide you with some great opportunities to buy in things that I think you'll want to hold long term, such as those commodities, Bitcoin, gold miners, etc.